Hi, welcome to my channel. I am Dr. S. Prabhakaran. Today we are going to see income tax law and practice, in that income from house property. Already I have posted 3 videos on income from house property. So this is the 4th video. Those who are not yet seen that 3 videos, kindly see the 3 videos and then you can watch this 4th video. So today what we are going to see here in income from house property is 3 houses has been given and their information is given. So with this we are going to compute the income from house property. Let's see the problem. Mr. Y has occupied 3 houses for his residential detail, of which are given below. House 1, house 2, house 3 is given. Fair rental value 10 lakhs, 12 lakhs, 6 lakhs. Municipal rental value 7 lakhs, 11 lakhs, 8 lakhs. Standard rent 9 lakhs, 14 lakhs, 4 lakhs. Municipal tax 10% of MRV. The 2,10,000 is not a municipal tax, it is interest. It has been gone upward. So interest on loan borrowed for construction. Loan borrowed during April 2012. For house 1, 2,50,000. For house 2, 2,25,000. And for house 3, it is 2,10,000. That 2,10,000 is not municipal tax, it is interest for house 3. So we are asked to compute here income from house property. So here 3 houses has been utilized by Y for residential purpose, but as per the act 2 houses only allowed for self-occupied, so remaining to be deemed to be let out. So let me determine which is going to be self-occupied and which is going to be let out. Now solution: computation of income from house property. Particulars: house 1, house 2 and house 3. Fair rental value for house 1 is 10 lakhs, for house 2 is 12 lakhs and for house 3 is 6 lakhs. Then municipal rental value. So municipal rental value is given for all 3 houses. So for house 1 it is 7 lakh, for house 2 it is 14 lakhs, 11 lakhs, and for house 3 it is 8 lakhs. So on this 2 things, that is FRV and MRV, the higher value is going to be considered. So as per the above values, for house 1 the higher value is 10 lakhs and for house 2 the higher is 12 lakhs and for house 3 it is 8 lakhs. So on comparing FRV and MRV, the higher value will be taken, that is 10 lakhs, 12 lakhs and 8 lakhs. With this higher value we are going to compare with the rental value. On these 2 things we are going to take the lesser value. So that is whichever is higher value and rental value is going to be considered. On the consideration of these 2, we are going to take the lower value. So 10 lakhs, with 9 lakhs, 9 lakh SRV for house 1, 14 lakh for house 2 and 4 lakhs for house 3. So on comparing the above 2 values of 3 houses, the ERV, that is expected rent value, in bracket itself I mentioned whichever is lesser, that is 9 lakh, 12 lakh and 4 lakhs. Now we can determine which is going to be considered as self-occupied and which are to be as a let out. So on comparing on three ERV values, three houses ERV values, the lesser is going to be deemed to be let out. So on comparing the three houses ERV value, the lesser value is third house. House 3 is the lesser compared to other two houses. So house 3 is going to be deemed to be let out, and remaining two houses is going to be considered as for his own residential purpose, that is self-occupied. So there is no actual rental value is given for all the three houses. There is no actual rent is given for all three houses. So if it is given, we can compare it with the ERV, that is ARV with ERV, and the higher value will be taken as gross annual value. Okay. So since there is no actual rental value is given, the ERV is going to be considered as gross annual value. So even though it is not given, I mentioned it in the bracket, that is whichever is higher. There is no actual rent is given for all three houses. So even though it is not given, just for a format, it's a regular format for calculating gross annual value. So that I mentioned it in the bracket, whichever is higher. On comparing ERV and ARV, the higher value is going to be taken as GAV, that is gross annual value. Since house 1 and house 2 is considered to be own residential purpose, that is self-occupied purpose, the GAV will be considered as taken as nil. So only for let out house only we are going to be consider GAV, that is 4 lakhs. So on GAV we are going to reduce municipal tax. So municipal tax is given 10% on MRV, that is municipal rental value. So this municipal tax is going to be reduced on gross annual value, so that we derive net annual value, that is NAV. So gross annual for house 1 is nil since it is self-occupied, and gross annual value for house 2 nil since it is also for self-occupied, and for house 3 it is 4 lakhs. On 4 lakhs, 10% of MRV is going to be taken as municipal tax. So 10% of MRV, that is 4 lakhs into 10%, not 4 lakhs, MRV is 8 lakhs. So on 8 lakhs, 10% is 80,000. So net annual value for house 1 is nil, for house 2 nil, and for house 3 3,20,000. So some more deduction is going to be deducted on NAV. A less deduction under section 24, standard deduction at 30% of NAV. So for house 1 it is nil, for house 2 nil, and for house 3 3,20,000 into 30%, 96,000. Then interest on loan, for house 1 it is given 2,50,000, for house 2 it is 2,25,000, and for house 3 it is 2,10,000. So even though it is given 2,50,000 for house 1 interest on loan, so maximum allowed as per the act, if the loan is borrowed after 1/4/1999, is rupees 2 lakhs only. So for house 1 and house 2, the maximum interest loan allowed is 2 lakhs. Then for if it is a let out, so whatever the interest has been paid, it has been deducted. So 2,10,000 will be deducted in the NAV. So total deduction for all three is 2 lakh, and for house 3 it is 3,06,000. So here income from house property, for house 1 and house 2 lost 2 lakh, and house 3 will have income 14,000. Then computation of income from house property. So self-occupied, for both the houses we derived losses of 2 lakhs, 2 lakhs. So since as per the act the maximum interest allowed for self-occupied is 2 lakhs, so both the houses, even though they paid 2,50,000 and 2,20,000, the maximum allowed is 2 lakhs, 2 lakhs only. So total of both the houses loss is 4 lakhs. The same condition, if the loan is borrowed before after 1,499, for total interest is 2 lakh only, not 4 lakhs. So if it is one house, 2 lakhs. If it is two houses, also 2 lakhs only. So maximum interest allowed as per the Income Tax Act is 2 lakhs only. So here the loss from self-occupied is 2 lakhs, and reduce the income earned on the let out, deemed to be let out, that is 14,000. So 2 lakh minus 14,000, you will get a 1,86,000. So total loss from house property is 1,86,000. So this is how we are deriving income from house property. In this problem, it was a loss from the house property on considering all three houses. So thank you for watching this video. So we will see in the next video with some other informative problem in the next video. Until then, thank you. Keep on watching my videos and subscribe it, and don't forget to share to your friends. Once again, thank you.